Now, COVID-19 has pushed the Singapore economy into a recession with a record plunge in GDP. Figures out today show the economy shrank 41.2% between April and June, the biggest quarterly contraction on record. That's compared to the first 3 months of the year when GDP contracted 3.3%. The April to June period also happened to be the time when the circuit breaker was in effect.
We're now joined by Head of Treasury Research and Strategy at OCBC Bank, Selena Ling. Hi, Selena. Now, Selena, the GDP numbers are worse than analysts expected. Why is this so?
Well, actually, it's quite close to what we were expecting, about 40.2% quarter-on-quarter drop from the first quarter. Year-on-year terms at 12.6%, it is a little bit worse than what the market consensus was looking for. I think, with the sense that this is an unprecedented lockdown situation and the circuit breaker, it was probably anyone's guess as to how big the impact would have been. For instance, construction sector, we thought that, we're going to see a huge 85% drop quarter-on-quarter, but actually, as it turned out, actually, it was even worse than that. So I guess we are kind of in unprecedented territory. This is a record drop both for the construction and the services sector due to the 2-month circuit breaker. The question is not so much what happens in the second quarter, but I think really what's the recovery path going ahead into the second half of this year.
Yeah.
On the recovery path, the Singapore government has set aside 4 budgets already totaling $93 billion to cushion the economic impact of COVID-19. Do you think a 5th budget is going to help, or what else can be done to aid the recovery of the nation's economy?
I think at this juncture, it is not immediately clear that there is a need for a 5th budget. And I say this with some caution because we acknowledge that second quarter was really a record contraction. Nevertheless, I think if you look at the full year growth expectations, we're still looking at about a contraction of 5.5% year on year. And the official growth forecast of -4% to -7% also remains intact. So I guess it's within a realistic range, as far as the second quarter growth numbers are concerned. So at this juncture, as you mentioned, they have already front-loaded a significant amount of both fiscal and monetary policy easing. Probably they will want to wait and see, what happens from here. Largely also because the global COVID-19 pandemic is still relatively fluid. So for instance, for the third quarter, we think growth in terms will still be negative. There will still be a contraction year on year, but probably it's going to be a little bit less severe compared to the second quarter. So I think, as far as fiscal policy is concerned, there is a likelihood that they may consider to extend, for instance, some of the job support scheme and the other aid packages, measures that they have to help businesses, mainly if the third quarter recovery story is more muted than what they initially expected.
Right.
But I don't think we should get our hopes up for another big bumper package again.
Yeah. So now let's put this into perspective. So a record 41.2% plunge in GDP. Now, how bad is Singapore's downturn compared to the rest of Asia and even the rest of the world as well?
Well, actually, it's a little bit premature to compare, mainly because Singapore is one of the earliest countries to actually announce its second quarter flash numbers. So I'll give you an example. This Thursday, we get China's second quarter growth numbers, and that is the one that market participants are watching very, very closely. Mainly because China is seen as the first in and first out of the COVID crisis. And if you recall, in the second quarter, actually, they started to restart their factories and reopen for business. So the sense of whether they will see a sequential improvement from the first quarter will probably be a good gauge for the rest of the world as they reopen the economies as well.
Well, thank you, Selena, for helping us make sense of the numbers and the situation as well. It was always a pleasure to speak with you. We were speaking to Selena Ling, Head of Treasury Research and Strategy at OCBC Bank.